For the next 12 months, I think Bitcoin will do well. I believe we've seen a fair amount of washout, just plain old soft custody. Bitcoin is, I think, in a great place right now. Some of the better treasury companies have cash flow that is stable or positive, and their M&ABS have gone down a lot. I believe that has made you look a little silly, especially if the ones that also have pretty low pressure. Well, I believe those are in pretty good shape. Gold is good for the long run, but the value investor in me is a little, it went up pretty high really quickly. Yes, I began to worry about that in April when it began a pretty long consolidation. The thing just broke out of it. I became a little more optimistic again, but it's still pretty thin. We'll see. In the last few days, many cryptocurrencies, including Bitcoin, Solana, XRP, and others, have tried these bottoms. This was a very important time for the whole crypto industry. Some of you may know that XRP briefly dropped to 267 and then quickly rose back up to where it is now at this price. It's possible that there will be more volatility in the coming months, but the risk of the upside is much higher than the risk of the fall. What I mean is that there are 95% or more chances that things will get a lot better from now on. Lyn Alden will talk about some new points of view that I have never shared with you before. Please hit the like button so that everyone in the XRP army can see this movie. Now let's start. It's still kind of like fiscal power where we are now. This is the same drum I've been beating for a while. It's about financial power with a hint of slowing down. There are some cracks in the job market because of things like tariffs and other headwinds, but they are not very strong. Yeah, it's one of those things where you can always find facts to back up something. There are a lot of data points out there that can help you find the things that are kind of hot. To name a few things that are really looking bad, business real estate has been having problems for a while now, and the residential real estate market has been pretty much shut down for a while now. As I already said, there are still some small problems in the job market, and many signs that things are not going well. So pretty much every camp can find what they need. Basically, though, I think the main point is that the private sector is moving gradually right now, but having structural deficits of 6 to 7% of GDP without a recession is a type of boost. That sounds like the kind of place we are in. And that's a lot of it that's already there, rather than something that was chosen this year or last year. It has a lot more structure to it. It has to do with rights. It's partly based on the cost of interest. It has some to do with defense and all of that other stuff. A lot of that is pretty ingrained and keeps things pretty high in what people call a two-speed or K-shaped economy. We can only sort of pay attention to what we can change. I don't think the troops will be here anytime soon. So I don't think the financial side will get its act together in a time frame that we can invest in. In other words, it's up to those people to do it themselves. And, you know, it depends on how much they know, how well they can handle fluctuation and a lot of other factors. It can be done with different things. To be honest, I believe Bitcoin is the most speedy horse in the race. That's what Paul Tudor Jones and other people have been saying for years, and I agree. Apparently different people like different things. Some like gold, others like stocks, still others like Bitcoin, still others like real estate, and still others like all of these things, or some of them. I'm in the I like stocks, gold, and Bitcoin camp. That being said, I do believe that Bitcoin will have had the best success of that group if we look back in 5 years. I think it will be about 10 years too. It's something you can do when we look at the general level. If the government doesn't do something about it, like lowering the cost of healthcare or increasing income through taxes, this problem will not be solved in a meaningful way. This typically falls on the individual. Since stable coins were already growing quickly and there was a clear need for them, it made sense for them to try to join the group. You should know that stable coins were very small more than 5 years ago. In a way, they were on the edges. But now, I mean, some stable coins are worth well over $100 billion, and the whole business is worth some $100 billion. Oh, I guess it could. It might get clear on its way to $1 trillion AUM in the end. These are some really big money pools. It's a lot like the euro dollar today. The main use for foreign dollars is to pay for things overseas, but you can also bring some of them back to the United States for certain reasons. People who have sent money internationally may understand the value of stable coins and how useful they can be. And of course, there are people who want dollars in places where it's harder to get real ones. Also, it's clear that this is a pretty strong use case. I can see why the government would want to write down how they do things. Of course, banks are scared of them, so they try to make it so that stable coins can't directly pay yield and other things like that. This way, they don't have to fight too much with bank deposits. For a long time, people in power, like central bankers and the government, have been afraid of things that look like they have full reserves. Yes, because they are afraid of what will happen to the fractional reserve one if one is full reserve and the other is fractional reserve. Why wouldn't all the money just disappear? After that, what does that change about the current loan situation when everyone involved likes it the way it is? And I'm sorry to cut you off, but this kind of shows how great stable coins are as a business plan, right? Because it's like giving out a ticket that's backed by a US dollar, and then you take that dollar and put it in a 4% yielding treasury. In a sense, you're just making money. You must be thinking that these are very successful successful businesses, right? Yes. Also, they're hard to get because of liquidity network effects. Since Steadycoin is already out there, it's easier to open a bank. Because of this, it kind of benefits the first people to get things done who are now the top 1, 2, or even 3 stablecoin issuers. Oh, but for those who can get there, it's pretty good money. As another way of putting it, the really big banks in the country can have a pretty large deposit pool of deposits that earn almost nothing. A lot of smaller banks, on the other hand, have trouble keeping their savings, so they have to charge higher rates. So stablecoins can pay right now, even though some rules make it harder to pay yield. It's pretty clear that there's been enough desire for them that they don't need to pass on any of that yield. That's because there aren't many providers that have any kind of network effect. They have been very profitable, like the most profit you can get per employee. This is what I've been trying to tell everyone I work with in finance, because I've been getting more involved in the public sector and real estate and many other asset classes as well. Most of them see that I do well in crypto and have a lot of questions for me, and this is the first thing I always tell them. Stable coins will change banks for good. For holding stablecoin dollars, banks can get 4% returns when they wouldn't have been able to get any before. If you compare it to a regular dollar, the only difference is that they are now buying bonds with every dollar they have. They can still lend money and use these safe coins for everything else they normally would. For the most part, they're starting their own treasury return business.